In this video, I'm going to talk about synthetic indices. Your volatility index, the boom and crash, step index, French break, and stuff like that. Synthetic indices, and why many traders are actually shifting from forex trading to synthetic indices, or actually adding synthetic indices to their forex trading. Hi guys, welcome back to the channel. If you are new, please consider subscribing so that you do not miss future videos. Like this video, that's the only thing that I ever ask you to do. Visit the links in the description box below. You find a value from those links. Let's get into today's video. So many people are shifting from forex trading to synthetic indices. What are these synthetic indices? Basically, synthetic indices are unique indices that have been put up by some brokers, including Deriv and Binary.com. Those are the most famous ones. By the way, you can click on the link in the description box below so that you visit these brokers. So they have these what they call synthetic indices. Basically, they are indices, but unlike indices like German 40, like NAS 100, like Australian 200, the FTSE, and stuff like that, these synthetic indices do not necessarily have real world market applications. So whereas with NAS 100, it's an index that trades, that looks at 100 of the best companies, technology companies in the US. S&P 500 is looking at the 500 biggest companies in the US. The FTSE 100 is looking at the 100 biggest companies in the UK. German 40 is looking at the ups and downs of the 40 biggest companies in the German economy. Synthetic indices, however, have got no real world application. They've got nothing that they measure in the real world in financial markets. What they are pieces of algorithm. Basically, it's a system that is so randomized, which does not have a real world application. So do not be tempted to look at there's the normal VIX, which measures the S&P 500, but the volatilities that you will find on synthetic indices is technically something else. It's not the normal VIX that you would find in the real world. So that's it about these synthetic indices. They are basically computer software which generates these numbers but for fairness, they are audited by an independent third party. And for fairness, the broker basically does not have influence on how these numbers are generated. So everything is sort of randomized. The broker cannot manipulate the prices, and nobody can really manipulate the price of these synthetic indices. And they are constantly being checked for fairness and stuff like that, which is unlike in the real world forex trading, where you have brokers manipulating things, bankers and stuff like that, the big players manipulating prices and doing all sorts of things, especially when it comes to major news times. So that's the basis of these synthetic indices. So should you trade synthetic indices if you are a forex trader already? I think you should. Like a good plumber, you should have different tools in your toolbox. Basically, there are days probably when forex trading is not working out, so you can shift to synthetic indices. And then there are days where synthetic indices are not working out. You can do your forex trading, or you can do both during the day. If you trade the way that I trade, where I trade high time frames, so you don't have to be limited as to whether you should stick to synthetic indices alone, or whether you should stick to forex trading alone. But by the way, you can still make a lot of money just trading synthetic indices. You can still make a lot of money, especially when you are trading volatility 75. If you are trading volatility 75, there are chances of making a lot of money with very little money. I've been able to turn $5 into $70, $2 into $32 overnight. That's what's crazy about these synthetic indices. It also means that if things do not go your way, you can easily lose money. Don't get me wrong. You can easily make money with synthetic indices, but you can also easily lose money with these synthetic indices. So you just need to be careful. Your risk management, everything that you used to do when you are trading forex, it still applies when it comes to trading synthetic indices. And there are a lot. You just have to find what suits your taste. We've got boom and crash, which spikes ups and down. We have French breaks. We have the volatilities. Most people go to trade volatility, and most people also go to trade a boom and crash. Very few people are trading things like range break and what was the other one? Step index. You can still trade step index, but most people when they go to trade volatility, the synthetic indices, they are aiming to trade volatilities as well as a boom and crash. Just like in forex, anybody has their own cup of tea. Some people prefer trading gold. Some people prefer trading Euro USD. Some people trade GBP, JPY, and stuff like that. So that's the story with these synthetic indices. And there are also advantages when it comes to trading synthetic indices. Yeah, they are high leverage and you enjoy tight spreads. This is unlike most forex pairs. And with these synthetic indices, you can also trade them around the clock, 24 hours a day. But unlike forex, you can trade synthetic indices 7 days a week, even on Christmas, even on New Year's Day, even or you trade them 365 days a year. They are not influenced by what's happening in the real world. So you trade them 24 hours a day, 7 days a week. Of course, there are a few ones that are reset at midnight each every day, but trading is 24 hours a day, 7 days a week. And the other advantage is if you have traded forex, you have noticed how brokers and big players try to manipulate prices when it comes to events that are happening in the world, maybe a breakout of a pandemic, maybe a war somewhere, maybe financial news that is negative or positive and stuff like that. And it also happens on things like NAS 100. It also happens like real world indices like FTSE 100 and Australian 200, German 40. They are all influenced by real world market news and events. However, synthetic indices are not. They are not in any way affected by what's happening in the world. They just continue as normal. That's one thing about it. So there's no need for to study fundamental news and stuff. You just need to understand your technicals. Then you also love the reason that you can start with very low trading capital. Like I said, uh, with boom and crash, I think you need run about $5 to start. With volatility, I've traded volatility in the index 75, volatility 75 index with I think minimum around $3, and I've managed to grow that $3 to like $20 overnight. So the you can do a lot with very low capital, very low capital. And sometimes you see gaps in the forex markets where from weekends, from news spikes and stuff like that. Those things never happen with these synthetic indices. So I think synthetic indices are ideal for beginning traders, experienced traders. People with a lot of money, people with only a few dollars to trade with, people who like to trade any time of the day, or people who have only free time to trade during the night. So my thinking is, yeah, you should go and try these synthetic indices as well. People are making lots of money. If you don't like them, you can easily come back and trade forex. But most people who have joined synthetic indices love them, especially if you find a strategy that works and makes you money. People stick with these synthetic indices. You can visit the links in the description box below. Otherwise, subscribe if you are not yet subscribed. Like this video. Leave a comment in the comment section below if you want me to talk about other things regarding trading synthetic indices and making money. Until next time, bye.